They're both network-based and growing exponentially. Their value increases as more users join, similar to how companies like Amazon, Facebook, or Google operate as network-based monopolies. So when reflecting on how I recognize the internet's potential, I can't claim that I saw it all with perfect clarity and certainty. If I had, I would have bought Amazon earlier and held on to it, but we'll discuss why I didn't. What I could see was the fundamental shift in how we communicated and operated. I knew we were moving into a more digital world where communication would become faster and more efficient. We had a novel network server in our office allowing us to send emails to each other, which was incredibly useful. It was clear that this technology was going to change everything.
They're both network-based and experiencing exponential growth, with their value increasing as more users join. This is similar to how companies like Amazon, Facebook, or Google operate as network-based monopolies. The more users these platforms have, the more valuable they become, which is a characteristic of any successful network effect. So when I look back on how I recognize the potential of the internet, I can't say I had a crystal clear vision or absolute certainty about where it was headed. If I had, I would have bought Amazon stock earlier and held on to it, but we'll get into why I didn't do that. What I did see was a fundamental shift in how we communicated and conducted business. I recognized that we were transitioning into a more digital world, where communication was going to become faster, more efficient, and more widespread. At the time, we had a novel network server in our office, which allowed us to send emails to each other. This was a game changer because it made communication within the office instant and seamless. It was a glimpse into the future, showing how technology was going to transform not just communication, but how businesses and people would operate in a more connected world. I knew that this technology was going to be transformative, even if I didn't fully grasp the scale of what was to come. The basic functionality and the direction we were headed were clear, and it was evident that the internet was going to change everything.
Subscribe our channel and press the bell button to get our video notification. And like the video.
That kind of growth is a clear sign that something's working, and you're seeing a similar pattern with Bitcoin. There's enormous adoption, rapid growth, and a surge in users, with ETFs further accelerating this trend. But let me tell you about a couple of opportunities I missed along the way. When Amazon and Google first came on the scene, they were growing rapidly. As I started my own fund, I focused on finding growth at a reasonable price. Initially, I found it in India with cell phone providers that were growing at 40% a year and trading at just 3 times earnings. That strategy worked well, but I was also looking for opportunities in the US. I noticed that Amazon and Google were both experiencing significant growth. However, particularly in the case of Amazon, there was a challenge that they weren't making any money at the time. Despite their impressive growth, the lack of profitability made it difficult to justify an investment based on traditional valuation metrics. This hesitation cost me the opportunity to invest early in what would become some of the most successful companies in the world.
That kind of growth is a clear indicator that something is working, and you're seeing the same phenomenon with Bitcoin right now. There's enormous adoption, rapid growth, and a surge in users, all of which are being bolstered by the introduction of ETFs. But let me share a couple of big opportunities I missed along the way. When Amazon and Google first emerged, they were experiencing incredible growth. As I started my own fund, my strategy was to find growth at a reasonable price. Initially, I had success in India, investing in cell phone providers that were growing at 40% a year while trading at just 3 times earnings. That was a solid approach, but I was also keeping an eye on opportunities in the US. I noticed the rapid expansion of Amazon and Google, both of which were clearly on an upward trajectory. However, particularly with Amazon, there was a significant hurdle. They weren't a team making any money at the time. Despite their impressive growth and increasing dominance in their respective markets, the lack of profitability made it difficult for me to justify an investment based on traditional valuation metrics. My hesitation was costly. Amazon and Google went on to become 2 of the most successful companies in the world. I was too focused on their current financials and missed the bigger picture, the power of their network effects, user growth, and the potential for long-term dominance. These companies were building the future, and I underestimated the value of their growth trajectories, even without immediate profitability. It was a lesson in recognizing the potential beyond just the numbers, something that's also relevant in the way we look at emerging assets like Bitcoin today.
I remember thinking, this doesn't make sense. These advertisers are getting duped. They're spending huge sums to get placements on Google, but it's not working. I was wrong about that. But because of my skepticism, I couldn't see the bigger picture. Both Google and Amazon were network businesses, becoming more valuable as more users join. Now, with Bitcoin, I am determined not to make the same mistake again. When I first understood what Bitcoin was a network of money growing steadily and exponentially, I realized its potential. Everyone needs money, and Bitcoin represents the most sound form of it. As Michael Saylor and Preston Pysh have pointed out, there is no deflation or inflation risk with Bitcoin. There are just 21 million coins in that asset. Investing in Bitcoin is an obvious clear bet. While I can predict short-term price movements of whether it will reach $100,000 by the end of 2024 or not, I am absolutely certain of its long-term trajectory. I believe it will eventually hit $200,000, and someday it's going to reach $1 million, then $2 million, and perhaps even $8 million per coin. This is the power of a network effect in a financial asset, and I am not going to miss out on it this time around.
I remember thinking, this doesn't make sense. Advertisers are paying huge sums for Google placements, but it's not working. I was wrong. But that skepticism blinded me to the bigger picture. Both Google and Amazon were network businesses, gaining value as more users joined. I missed out on their potential because I couldn't see how powerful those networks would become. With Bitcoin, I am determined not to make the same mistake. When I first grasped what Bitcoin was, a network of money growing exponentially, I recognized its incredible potential. Everyone needs money, and Bitcoin offers the most sound form of it. As Michael Saylor and Preston Pysh have said, Bitcoin is unique. There is no inflation, no deflation, no deflation, just 21 million coins, and that is it. This scarcity, combined with its growing adoption, makes Bitcoin an obvious and clear bet for me. Now, when it comes to price predictions, I don't have a crystal ball. I can say where Bitcoin will be tomorrow or at the end of the year, though I wouldn't be surprised if it hits $100,000 by the end of 2024. But what I am certain of is its long-term potential. I believe it will eventually reach $200,000, and someday it's going to hit $1 million, $2 million, and perhaps even $8 million per coin. This is the power of a network effect in a financial asset, and I'm not going to miss out on it this time around. Bitcoin is the future of money, and I'm all in on its potential.
Subscribe our channel and press the bell button to get our video notification. And like the video.